It is Niemira at Fintech and Founding Conference 2019, and I have a pleasure of talking with Safwan Zaheer, head of Fintech, formerly at KPMG. And as a Fintech person, probably you'll agree with me that Fintech companies are fearless. And so does this mean that, they are just like a short-term wonders or long-term solutions?
Well, thank you, Anna, for having me. I think we'll see a mix. There will be some fintech startups that are going to be short-term wonders. Some will stay around and pivot until they find the right product and market fit, and some will scale massively. However, what fintech firms have taught incumbent banks, I believe two things. One, when you mix design and technology to build financial products that serve and solve a particular need, you can actually make banking products more exciting and engaging, products that have been for decades very boring and monoline. Second, fintech firms have pushed the banks to be agile, nimble, think about innovation, think about digital, and really they have sparked a boardroom discussion among executives and C-suites as to how they need to transform in order to compete with the new ecosystem that's being developed.
Is it truly so? That means, from what you're saying, does this mean that fintech companies are truly represent some kind of the danger for the big traditional institutions?
Yeah, I think the argument about fintech firms being a danger, the jury is out. I believe there's going to be a mix. There will be some fintech firms that will scale to become a banking services provider, and some will be acquired, perhaps, and certainly some will die out. But the great thing that's happening in the market is banks have realized that they need to change, and they need to change not in the manner where they can just put up an app or a website presence or a tablet app, but rather rethink financial services. For example, provide access to capital that has traditionally been not so easy, reduce settlement and payment delays, reduce the intermediaries in the payment side of things, provide access to financial services to segments that were traditionally underserved.
And at the same time, improve the operations as well on their side, reduce the cost using certain fintech solutions as well. So rather, the cooperation can work wonders for both sides, the fintech and the older institutions. And at the same time, improve the customer service as well and what is being offered to the customers. So a lot of fintech companies nowadays use artificial intelligence. Is it the way to go?
No. I believe technology is an enabler. AI has its part to play, and so does several other technologies. Blockchain, cloud, digital identities, quantum computing, etc. The way for financial institutions to compete and change is to provide banking services and change the ecosystem with their existing products. So, for example, as I stated earlier, being able to provide access to capital, being able to serve the underserved market, being able to improve on their underwriting and credit decisioning functions, being able to, as you stated, the operational element, being able to change their technology platforms, because I believe the future bank is going to be very automated, likely all digital, with technology platforms that are run by sophisticated algorithms and sophisticated programs that mediate information between customer, merchants, and markets.
Well, that's fantastic. So the future actually looks very brightening for all of us, because if that improves the customer service, that's always great for everyone
Absolutely.
who uses the banking. And we are in that position one way or another. Either it's a fintech institution or the traditional bank. We have to use financial institutions. Thank you so much for being here and speaking with us. Really appreciate it. Thank you so much.
Thank you, Anna.